At the moment, the European economy seems to be really struggling when you look at the US, and the UK may not be at the bottom of the rank, but as always, it's not far from the bottom. In this video, we're going to be discussing why the US seems to be doing so much better than the UK economy. As always, the UK has made some maverick decision making, and I wish they'd talk us through their thinking. You'll notice that the rate of inflation in the US is significantly lower than it currently is in the UK, and it also peaked at a lower rate than it did in the UK. Unemployment data, they're reasonably about the same. They're sort of around the 3.5% bracket, but when you start to look at pay data, you start to see a bit more of a disparity starting to show through. US growth has significantly outdone the UK. The US economy is now about 7.4% bigger than it was at the start of the pandemic, whereas the UK is only 1.4%. And we're also starting to see a pretty big divergence when it comes to stock market returns when you compare the S&P 500 to the FTSE 100. So why is the US economy doing so much better? Well, I think one of the first things that we have to talk about is government stimulus over the COVID period. Now, both countries spent vast sums of money in order to support the economy. In my view, absolutely the right thing to do. It's much better to keep people paid and in work rather than out of work, and then you have potential income scarring, which is a much longer term problem. The US also passed the Inflation Reduction Act, a pretty significantly sized economic package aimed to reduce inflation and help to decarbonise the US economy. And the Inflation Reduction Act is also forecasted to cut the overall deficit of the US by about 300 billion over 10 years. And so what's the summation of all of this? Well, this is basically just a massive investment in US manufacturing. And so this is kind of really a shot in the arm, which the UK just hasn't done. The UK has continued down this path of cutting public spending for the most part, rather than these big large-scale investments in order to kickstart the economy. Supply side shocks. When you start to dig into the numbers, you see that the US is generally much more energy independent, it's got a much more independent food supply, and the UK just kind of doesn't, and so this means that we're way more vulnerable when it comes to these external economic shocks. So historically, in the recent past, we've had obviously the war in Ukraine, we've had the conflicts that are going on in the Red Sea, which is threatening the Suez Canal. All of these are potential things which will have a disproportionate impact on the UK when compared to the US. The Federal Reserve, I think it's fair to say that the US went completely bananas when it came to printing money, when it came to purchasing assets, when it came to all of that sort of thing. And so this much more expansionary, much more accommodating monetary policy meant that as soon as people could go out, COVID was for the most part behind us, it basically meant that people had much more money to go out and spend. Now, obviously the downside of that is there are potential inflationary pressures, but if you've got this kind of accommodating monetary policy, people go out and spend, and then you pass the Inflation Reduction Act to try and quell some of that inflation, you don't get this big spike and then this sort of gradual decline, which is kind of what we've seen in the UK. You get this big initial spike, but then the Inflation Reduction Act means that the rate of inflation comes down much more quickly. A service-based economy. The US has lots of big tech, it's got heavy manufacturing. The UK is a much more services-based economy. You look at things like hospitality, you look at leisure, and those are really kind of way more impacted as a result of the COVID lockdowns. Mortgages. Now, post-financial crisis, the US basically transitioned to the sort of 30-year mortgage model. It is a fixed rate. Now, the UK has not necessarily adopted that model. It stayed more with, insanely, it has stayed more with the kind of model which we had during the financial crisis, which was an introductory teaser rate mortgage, and then once you come off your fixed, you then go on to this variable, which can be stratospherically high. And so what it really means is that as interest rates have gone up in the US, unless you're moving home or you're refinancing, you're kind of insulated from a lot of the effects of the interest rate increases. If you're in the UK, your fixed is going to expire at some stage and you're going to have to refinance to a higher rate. And so all of this is just eating into people's potential purchasing power. And we've sort of touched on this, but I want to go into it in a bit more detail, and that's investment. So the UK rate of investment has been exceedingly poor for a very long time. The US government has really invested a lot to kickstart that productivity growth. So that means not only is productivity continuing to grow in the US, and we're starting to see some really promising trends, but also, that just means that wages are going to go up. And unfortunately, we're seeing the opposite in the UK, fiscal drag. Because the government has elected to keep tax bands for income tax frozen until 2028, when people go out and get these pay rises, a portion of their salary is getting pulled into a higher tax bracket. UK consumers really find themselves stuck between a rock and a hard place. So in conclusion, what can we infer from all of this data that we've looked at and all of these different variables? The US has taken a much more proactive approach when it comes to kickstarting the US economy, and that has really helped to not only kind of push demand out to consumers by giving them money to go out and spend through stimulus checks and so on, but it's also meant that the supply has been incentivized to go out there and meet that demand. But if you stimulate demand, but then you also make sure that there's supply out there, that's where you want to be. That is when the economic magic happens. As always, the UK has made some maverick decision making, and I wish they'd talk us through their thinking, which is to continue to cut public investment, and we see more and more people getting stuck in these higher mortgage bands. Make sure you subscribe because we have more videos coming out on this topic in the next few days. Thanks very much for watching. Peace.